The euro broke below the sideways channel, extending weakness as part of a correction. Although the uptrend initiated in mid-June remains intact, the market is under the control of bears. According to the chart, there are few willing to buy the euro at current levels. Even downbeat data from the United States has not helped the European currency to close with even modest gains. As for the British pound, there was a furious battle for the level of 1.2906. However, despite bulls' vigorous efforts to close above this mark, the pound sterling plunged to yesterday's low in today's ASEAN session. Obviously, the risky assets will remain under pressure. Much will depend on fundamental factors. Today's macroeconomic calendar includes a batch of statistics on manufacturing and services activity from the euro area and its member states, the UK as well as the US. The bloc's composite PMI is expected to come in at 51.1 in July, weighed down by problems in the manufacturing sector in many EU countries, particularly in Germany. The index for German manufacturing is below the 50-point mark, indicating contraction. The services sector is the main contributor to economic growth. If the data is better than expected, the euro will have a chance to recover. Otherwise, the European currency will extend losses. Meanwhile, the UK manufacturing and services PMIs are above the 50 threshold. The country's overall economic situation is not bad. Therefore, positive statistics could support the British currency and help it return to the sideways channel. US PMI data is also due out today. US manufacturing activity is quite robust. If the report disappoints, the euro is likely to recover from the significant bearish move that began on July 17th. Traders may also take notice of new home sales and goods trade balance data. In addition, Fed officials such as Michelle Bowman and Lori Logan are set to speak today. Now let's move on to technical analysis. According to the 1-hour EUR USD chart, a false breakout at 1.0855 amid weak data from the United Euro area will generate a sell signal, dragging the euro down to 1.0834. Its breakout will pave the way for further losses to 1.0813. At this level, I recommend going long on a rebound to catch an intraday correction of 15-20 pips. Long positions at 1.0834 can only be considered after a false breakout. Alternatively, if the price breaks through 0.855 and consolidates above this level, supported by upbeat statistics from the euro area, the European currency is expected to climb to 1.0877 and probably 0.896. At the level of 0.896, it would be a wise decision to go short on the rebound, expecting a 15-20 pip move. Going short at 0.877 will only be relevant on a false breakout. Speaking of the GBP USD pair, strong business activity data from the UK will allow bulls to regain control of 1.2906. If the price consolidates above these marks, sterling likely to rise to 29.39 and even 29.74. In this area, traders are advised to go short on the rebound, counting at 30-35 pip decline. Short positions at 1.2906 and 29.39 can be opened at a false breakout. In this case, the British currency is expected to dip to the 28.70 mark. Its breakout will open the way to 28.37, where it would be wise to go long on a rebound to catch an intraday correction of 30-35 pips. Going long at 1.2870 will only be appropriate after a false breakout. Best of luck.